Nischal, morning. Uh, we just threw Q2 earnings. How will you sum up the earnings for us?
Morning to you and all your viewers. I think if I would term it, I think slightly better than expected. I'm happy to say that basically because at the beginning of the Q2 session, I think there was a lot of pessimism basically. I think, but the numbers have come out slightly better than what people were expecting. So overall, I'm more positive on the earnings outlook now.
Any particular sector that looks to be good after the earnings, Q2 earnings, because we went into the earnings with a very cautious note actually.
I think BFSI one is to be really called out. The numbers were better than expected. We were expecting that the NIMs for most of the banks are going to be actually negative, given that we had an interest rate cut down and the reset happens over a period of time. But still, I think most banks were able to show a slightly positive NIM. So I think they are getting set very well, basically, because you have got a very strong consumption quarter going on, and then it's going to be the busy season in Q4. So I think BFSI banking is one sector basically which is really held out, and valuations are very comfortable.
And what about Nischal? Hi, morning. This is Harsh here. Nischal, what about Tata Motors in terms of the numbers? How do you assess it? Does it change the medium to long term thesis or the way you look at the stock?
So I think positive and negative, Harsh. Morning to you. One part, EV now becomes a separate thing, and it's going to be India dedicated. So that way, basically, it is positive. But PV is basically, as you know, it's largely driven by JLR. So till we get the US and the China problem sorted out as far as JLR is concerned, I don't think so. The domestic sales is going to be of much consequence. Though I think the domestic quarter is going to be good for the current quarter and possibly the next. But then the JLR issue still continues to remain there. So I would avoid the PV, but I think CV is in a good point at this point of time.
And Nischal, I'm going to hold out on Tata Motors. Ask you another question on it. You know, one is obviously these temporary issues, cybersecurity and otherwise. What do you make of the kind of demand environment shaping up globally? Because JLR depends so much on global demand. Does China's car making muscle impact JLR significantly over the medium to long term in the global marketplace? Do you believe that that's a major risk?
Is that question for me, Harsh?
Yes, please, Nischal.
Yeah, definitely. I think you look at it, China is now actually competing with the large majors in the US also. So definitely, I think China is going to be a big threat. You look at it, and I think going forward, EVs are the main thing. And all big companies across the world now are from China, basically, as far as EVs are concerned. So sooner or later, I think JLR is going to face, and JLR anyway has the second largest market is China for them, or maybe the largest market is China for them. So I'm saying that competition basically is immense. And so what you need to do is basically you have to start thinking how much more R&D spend is going to be there as far as JLR is concerned. So I think that's a major concern. And then you have tariff issues in the US. So I think both those things are actually, till it gets sorted out to an extent, I think the PVs are avoid basically.
Nishal, can you also talk to us about the IT companies? We entered into Q2 with a very circumspect for IT, but I think IT hasn't been so bad in terms of how they performed from a top line point of view because of the currency, tailwind that they had. They were able to do a much better job. But in going into Q3, when dollar is expected to weaken, do you think that there's going to be a challenge for IT?
So I still think that there is a challenge basically. This quarter obviously is going to be because the reason that there is going to be a furlough here in this current quarter. So you are going to miss the same kind of numbers. But having said that, I don't think so there is strong visibility as yet basically for IT to rebound. The only good part remains to be that the valuations have become more attractive as far as the large cap IT is concerned. And but I think there are some bright spots out there also, especially in the mid cap side. And one should look at more focused onto the mid caps rather than actually trying to focus on the large caps as far as IT is concerned.
Okay, focus on the mid caps over the large. Let's also bring in Chandan Taparia into the conversation, derivatives and technical analyst at Motilal Oswal. Good morning, Chandan. What are your observations? What are you penciling in for the rest of the week in terms of charts?
Yeah, so the good part is that Friday's recovery was remarkable as market witnessed sustained buying interest from lower levels and witnessed a decent recovery of more than 200 points. However, the index negated its formation of higher highs on the daily chart, but supports are intact. And the good part is the index is absorbing all the supply near its all-time high of 26,000, 26,100, 26,277. So good part is that supports and bids are shifting higher. And I believe till Nifty holds about 25,700, it has potential to head towards the next lifetime high of 26,277 to 26,500. And if we need to talk about the financials and the banking, I believe Bank Nifty will outperform. And till it holds about 57,750, 58,000, it can head towards 59,000 to 59,500. Talking about sector, we have positive view on the PSU banks, selective auto, and financial and capital market sector will do well in this market scenario.
We saw Nifty futures adding nearly 2,200 odd crores of open interest, and if you break it down, then you have the index futures for FIS adding nearly 1,800 crores of short positions. So there is a short build-up which is happening every time a market is going up, and if you look at the long position for the foreign investors, it's now come to nearly 11%. So is that a cause of worry that every time you go towards 26,000, the shorts are building up, and there is going to be resistance that's going to come in?
So like if you look at the index long short ratio, this ratio moves in between 10% to 75-80% from last 3.5 years. And 6 time market exactly met the bottom with the lower band of the ratio of 7 to 10%. However, this time the market took more uh, consolidation near the lower band of the ratio. I still remember in last 6 instances, whenever the ratio goes to 10% and turns higher, index has potential or rallied by more than 1,500 points. This time it has been consolidating. However, the good part is in just a couple of days, it headed to 25%, again back to 12-13%. So that is the only concern, and I believe that is happening also because of the USD INR. If you notice the USD INR, that is challenging 89 marks from last 3 consecutive months. If rupee gets some strength or dollar gets some weakness, I think that will be the next trigger to commence the next leg of rally towards the new lifetime high. So because of that, market is finding some hiccup, but as DIs are continuously buying, and that's why the declines are being bought, and that's why we are turning more of the range bound bias or buy on decline stance are being more bullish in the selective sector and theme in the Indian market.
Okay, Kunal, stocks that stand out for you, your picks for this morning?
So in terms of the picks, we discussed Axis Bank as something which is very important in terms of a potential breakout. That's the one which looks attractive. Vodafone Idea is something which is the other stock which I highlighted. The stock at 11.5 as a target.
Perfect. Chandan, any stocks that you like on your radar this morning?
Yeah, so as I mentioned, that positive on the capital market, PSU and financial. So first trade will be buy on MCX. Silver and gold have seen a decent recovery. MCX is getting the lifetime high trading volumes on exchange. The sector is doing well, and stock has been making high top, high bottom on the weekly chart. So expecting next leg of rally with support of 9,400. We are expecting counter to head towards 5-digit marks of 10,000. Apart from that, positive on the PSU bank, SBI is preferred name. It has been making higher tops, higher bottom on the weekly chart from last 10 to 12 weeks. In fact, on the daily chart, it has given a consolidation breakout with latest highest daily close. So with support of 945, it can head towards 1,005 kind of level. So MCX from capital market and SBI from banking space will be two preferred idea for the day.
Okay, we slip into a very short break. On the other side, we'll continue conversation with our...
Some of the underperformers like a Reliance, Asian Paints, they are finally now participating and trying to dash up. That gives you some bit of confidence that maybe there is some more leg or headroom to the move that you already had at your hands so far. But that said, on Friday, of course, Eternal made a comeback after dipping below 300 as of last week. BEL moved up substantially, about another 1.5% higher. SBI looked very good, another 1.5% move there as well. And then Axis Bank as well looked good. About 1.25% of a move coming in there. But Nischal, hi, morning. Firstly, I think the big story from last week, or rather the last fortnight, has been the bounce that one has seen in Asian Paints. How durable does it look to you this time?
Hi, morning to you, Aisha. It's more of a trading bounce is what I see basically. Because what you see here is, very strong volumes coming in, but in terms of value, so a 10.5% increase in volume, but a value increase of only 6.5%. So it's more, volumes are very good, but at the lower end of the pyramid. So maybe it is impacting the margins. Having said that, I think, it's a good trading bounce, but at 65 times, I think that's the valuation basically, which I see. It doesn't justify basically be having it in your portfolio. I think that's true for most of the FMCG stocks.
That it is. But Kunal, how much more legs to the bounce, which Nischal thinks it's just very tactical in nature?
For
Asian Paints.
I think it's the start of a new rally, Aisha.
Yeah?
I strongly believe so because, the stock has gone through a massive underperformance.
Yeah.
2022, 23, 24
For
and good part of
years.
2025.
Yeah.
I think the entire last 3 or 4 years has been underperforming for Asian Paints. We used to have those debates where the stock gets highly correlated with crude oil. So if crude oil prices are down, then Asian Paints has to be favorable. But in all phases, the stock has underperformed. Now is the first time where you're starting to see the sink in terms of prices, the news flow data point for Asian Paints. Even on the charts, I was looking at the weekly, monthly charts for Asian Paints, and the stock is coming out of a huge consolidation on the indicator front. So that itself indicates we are looking at not just a turn of a 5% or a 10% up move, but I strongly see that potentially over the next 12 to 18 months, the stock should be able to scale past about the life highs also and move beyond that and start off a fresh all-time uptrend for
And
itself.
what was the life high on Asian Paints?
3350 or 3400, which means another 15%. And for a low beta stock like Asian Paints.
Yeah, that's true.
Nischal, if you look at consumption as a theme, what we have seen here in this earnings season that the markets are rewarding companies who are trying to maintain their market share even at the cost of margins. Do you think that that's a kind of thing which will play out for the next 1 or 2 quarters?
Yeah, I think it has always played out in India. India is a growth market. So whoever is giving you that kind of growth, basically, I think market is rewarding that. So all the new age consumption companies, basically, when they are pushing the envelope as far as growth is concerned, I think market is rewarding that. So I continue to believe that that growth is the way to go forward.
Right. The other pocket which held out very smartly all through last week was not just gold, but gold financiers. You had them come out with the earnings and a huge spurt up in both Muthoot as well as Manappuram. Both those stocks have been holding out very, very smartly indeed. But Chandan, what's the reading on the charts? How much more headroom after what has already been a fabulous performance in the last 1 year, in the last 2 years, whichever way you want to cut and dissect the chart?
So yes, we have seen a decent run up in Muthoot Finance. It really did well by 10% on last trading session and up by around 74% on YTD basis. The good part is that financial companies are doing well, and the momentum in the gold and silver is the reason that how these gold finance companies are doing well. So I believe the ongoing momentum could continue. Trend is intact to positive. However, risk reward ratio might not favor, but as of now, it seems that ongoing move could continue towards 3,900 to 3,950 kind of level. So those who are holding, they can keep the support at 3,600 to continue the long positions. Those who are talking on positional point of view, I believe with support of 3,250, it can head towards 4,500 marks as well. So positive view on the Muthoot Finance. Talking about Manappuram, however, it is moving slowly, but major trend is positive. It also led well by more than 49% in this year, has been consolidating, surpasses falling supply trend line, but comparatively positive to range bound on the lower time frame until it holds about 274. It can head towards 295 kind of level. So positive stance on both, but Muthoot has more momentum and legs to open on the higher side in current scenario as well.
You know, the other set of numbers that were really, really strong was a Narayan Hridayalaya as well as a Max Health. You know, the healthcare space, Nischal seems to be doing very, very well. Really resilient earnings, strong growth momentum on profitability as well as on top line. You're seeing very, very healthy set of numbers. And ahead of estimates, Nischal, despite the kind of valuations we're seeing. That's the one pocket which is really standing out. Do you believe that there is positive tailwind here and valuations, given the kind of earnings beat, are justified?
So I do not see any more re-rating of the sector to happen. I think it's already trading at a very, very steep valuation. But I do agree with you that the earnings momentum itself will keep on driving the market, keep on driving the stocks up. And a 15-20% kind of a growth for a foreseeable future of next 2-3 years doesn't seem to be very difficult. So that way, basically, I'm positive. But now you have to become selective in what you are acquiring in the healthcare space. Maybe 2 years back, everything could have been bought. But now I think you need to be selective in this space.
Where would you tilt towards in terms of a call within healthcare if you were to make one? Are there any?
I would look at, so this is, as you know, this space is basically more of a step up kind of a function. So you need to set up the hospital beds and all basically, and that's a heavy capex. So you have to look at saying that which are the companies basically which have already done the capex and now are in the execution mode. I think Apollo seems to be there. They have really done in the last 2 quarters. I think the stock, last 2 years, the stock has been maybe on the sideways. So I think Apollo seems to be in a good place for that.
Kunal, do you have a tilt in terms of names within the healthcare space?
I think Fortis is something which has done reasonably well. Apollo Hospital at current levels of 7,440. I was looking at the near charts. The stock has gone through a 7-8% correction in the last 1 month. I think from 8,040 levels to 7,440 for Apollo Hospital. The indicators, the trendline support for the stock at current levels makes the risk reward attractive. But it's just that in the last, I think, a month or so, the momentum for these stocks have gotten arrested. So, earlier these stocks were making a very free-flowing new high for themselves, volumes rising up higher, the trends being a lot more stronger. This is the first time where you've seen a correction happening of sorts for the entire, for most of the stocks in the hospital space. And I think that's one of the reasons why I would believe that maybe if someone is playing for a bounce, that bounce may not materialize into a stock coming back into new highs. So you'll have to keep a little bit of a muted target set over here. For Apollo Hospital specifically at 7440, I think it could be an attractive bet for a swing target of 7650 to 7700.
Okay, bunch of other stocks. IRB Infra, look out for that one because one of their associate companies, IRB Infrastructure Trust, has bagged an LOA for an upfront consideration of 9,270 crore rupees from the NHAI. So that's going to be one critical name to look out for. And even Anant Raj, one of their arms, is looking to invest a sizable 4,500 crore rupees in development of a data center facility in the state. So that stock is well in focus. Narayana Hridayalaya, as Harsh was just pointing out, revenue beat, EBITDA strong. And I guess the valuations in the entire hospital sector are clearly justified. And Kotak Bank, wherein the board is also looking to consider a share split on November 21st. So that stock is the other one, which is also going to be on everyone's radar. But that said, Nischal, just wanted to address this entire data center piece. Very nascent stage at that, very few companies in it. But do you think from the listed pool, Anant Raj is a good bet?
Yeah, I think so basically that, but it's a very, very capex heavy thing. So you have to be careful basically what you are betting on because this is going to be a capital guzzler. So you need to back up companies basically which have got large pools of money. And you have to keep in mind that the ROEs on this thing is not going to be something outstanding. So yes, it can take in a lot of capital and generate a decent return of around 14-15% on on the capital, but it can't be a big a big return space. So I would actually rather play it through the picks and shovels guys, basically. So somebody who's setting this up, the EPC contractor, the electrical contractor, I would rather play this because the investment in this space is already, I think the commitment is around $4 to $5 billion. But this could grow much bigger basically because it's just starting off. As you said, it's an nascent stage. So identify the companies basically which are setting up the picks and shovels guys, and that's going to be a bigger beneficiary rather than actually going in for the people who are setting up the data space.
Okay. All right. We'll stay on top of that CNG story because CNG supply across Mumbai has taken